All right. So I want to believe you guys can see my screen. So our candlestick anatomy is very, very simple. Very, very simple. This will actually help you and save you the stress of having to memorize each of these candlesticks. Memorize the names of each of these candlesticks. You actually don't need to do that. You don't need to do that. You don't need to do this. Just like yesterday, we talked about the premium and discount array. We said it is only wise for you as an investor or as a trader to sell at a premium zone. It is only advisable to sell at the premium zone and then to buy at the discount zone. You understand? So this place simply means this premium, we could call it supply, the supply zone, because supply simply means to sell things, to supply, to sell things to your customers. Why the discount simply means demand. This is where we have large demand orders. Demand for something, you want to buy something. Very simple from our basic economics in class. So equilibrium or indecision simply means decisional zone. This is where we basically sit on our heads to know if you are going to be buying or we are going to be selling. As simple as it is, nothing complex at all. Very, very simple. So this year, this candle here is what we call the engulfing candle. Let's come to the chart. The engulfing candle. We have this one here as an engulfing candle. Let me just explain something here. Engulfing simply means to cover or to overthrow. For instance, we have this candle. This is our, let me say, the sell candle. This is our sell candle. Then we also have another candle that just came to engulf it or to surpass it. Do you understand? So we can see, based on what we know, that this red candle opens here. You can see then this is the close of the candle. So when the candle closed here, immediately the bullish people or the bullish market participants came to engulf this previous candle here. You can see it. So it simply means what we'll be expecting is to see more bullish candles scenario. To see more bullish candle scenario. Do you understand? So when we see this engulfing candle, we are expecting to buy. That is just the indication. It simply means the buyers are having are dominating the market. As simple as it is. When you see your bullish engulfing candle, just like what you see here, you can see that this candle here engulfs this candle here. So we're expecting more buy side based on this price action here. We're expecting more buy side. Something like this. Anyhow it wants to do, I'm expecting buy there. If you actually check everything, you would see each time we have an engulfing candle, we easily see that the price will always pump. You can see here this blue candle. Let me just change this on this class for beginners. Okay, no need. You're all very wise. When you see this blue candle, it simply means the green candle. When you see this red candle, it's just red. So the blue candle signifies buy, while the red candle signifies sell. So at this particular point is what we call the bullish engulfing candle here. You can see it, the bullish engulfing candle here. So once you see bullish engulfing candle, you're expecting to see more higher highs, higher lows, like that. We're expecting to see more higher price. We are going to see more demand to step into the market. Do you understand? Until we see the next engulfing candle or the next reversal candle. So don't let us go too far yet. Let us go too far yet. This B candle is what we call the Maribazu candle, but you don't need to know the name. You can just go to Google and check types of candlesticks if you want to. If you wish to memorize the name, then you are good to go. There's nothing bad in memorizing the names of each of these candles, but the major thing, the market will not reward you because you know the names of all these candlesticks. The only place you get your reward is by careful analysis, well articulated analysis that you understand the candlestick psychology and the anatomy of each of these things you need to interpret and take well informed decision while trading. So this candlestick simply means to buy. Okay, let me add some annotation here. Here is, let me see, the 100%. So I like using bullish scenario. So we all know that the bullish candle always open at the bottom. Don't forget, it always open at the bottom here, then it closes here. So based on this parameter, this stuff we do here, premium and 100%, equilibrium or indecision at 50%, then discounts at what 0%. So it simply means the price started at this is 0%, then pumped all the way to the 100%. Simply means we have 100% bullish scenario. It means when you see this bullish candle, this engulfing candle, it simply means the buying pressure has increased, or we have more buying pressure in the market, as simple as it is. So in contrast, when you see this bearish engulfing candle, it simply means that we have more selling pressure, just the opposite of this bullish candle, bullish engulfing candle. So yeah, it simply means we have more selling pressure. So when we see this market dominance, that means we are seeing that the sellers are actually dominating this current time frame. Then we're expecting to sell. Do you understand? But we are not trading candlesticks. This is just the basic. This is like the bedrock. Do you understand? I'm not saying you should open your charts tomorrow and then when you see red, you press sell. When you see buy, you press. No. That is just pure edging. You're not ready for trading yet. So before the next class, I'll make a video tutorial on how to place our trade for the newbies, how to use the MT5. I'll send a video on how to navigate your trading view, so at least everybody will be on almost the same page. Now you are done with this engulfing candles here. This simply means higher. In fact, this is the highest pressure you can see in the market. If you are talking about the bullish engulfing candle, it is the highest bullish pressure you can actually see in the chart. This one is the highest bullish pressure you can actually see in the chart. Why this is the highest bearish pressure you can actually see what's in the chart. Is the highest bearish pressure you can actually see in the chart. Now followed by this one. Where is the open? The first thing you should always have to say is the open. Where is the open of a bearish candle? The open of a bearish candle is always from the top. The analogy is just like you want to throw something on the floor. Don't worry, don't forget that bearish simply means to come down. So for it to come down, it simply means, or for it to have been said that it came down, it simply means you started from the top. You understand? So it simply means this bearish candle started from this top, as simple as it is, then it's dropped down to this close here. It's dropped down to this close here, which is the body. So at particular point in time, the market opened there, pushed the price up to this side, pushed down to this side, then we got our close here. So but this is actually a selling pressure. Why? Because okay, let me write buy here. Hold on, please. Let me write buy. Let me use trading view stuff. And trading view. Okay. This is to buy. This is to wait. Let me say wait here. This is to sell. This is our sell zone. This is just basic stuff. So when we have a close above this weight or this indecision, it simply means it's a buying signal. Please write this down or let's stick to your head. When we have a close above our 50%, above our waiting zone or decisional zone or equilibrium zone, it simply means we have a what? A buying signal. But when we have a close below it simply means what? We have a selling signal or a selling pressure, as simple as it is. So when this closes above the 100, or sorry, just 100%, you have to engulf it. It simply means you have an extreme buying case here because it's closed above this 50% or equilibrium. So we have an extreme buying case here. Simply means sellers do not have any say in this market. So we have this selling engulfing candle here, or the bearish engulfing candle here. It closes below in an extreme low. Simply means we are expected to sell. Don't forget, you have just two. What is it called? We have just two duty in this market: to either buy or to sell. So we can either buy or sell as the condition of the market actually. Okay, let me put it back. Okay, as the current predicament of the market. Let me see. Now, yeah, around this zone here. Sorry. Around this zone here, the market's actually closed. Opened here and then closed below our sell or our weight. It came inside our sell, which also indicates what? Selling pressure, as simple as it is. However, we cannot compare this selling pressure with this selling pressure. Why? Because this one is giving us what? 100% selling pressure. It means it's giving us an extreme case of selling pressure. Do we understand? Please pay attention. It's giving us an extreme case of what? Selling pressure. So we cannot okay, let me say, okay, yeah, this should be our A plus entering criteria, A plus whatsoever. Let me see, this is our A plus setup for sell entry. This is our A plus. Then this is going to be our B. This is our B. All right, so this is, of course, please, I've told you guys, it's not really about the color. The color is just for beginners. Do you understand? Just for easy assimilation or easy distinguishing, I'm waiting for English, to be able to distinguish between a sell or a buy whatsoever. But does not necessitate that anytime you see a red candle, you sell. No, you have to understand what the candle itself is saying. The color itself can be deceptive, but your ability to be able to interpret each candlesticks, be able to say, okay, this is the structure of this candlestick, and this is what this candlestick is actually saying at this particular point in time, will actually help you a long way in navigating this market. So this price action here is selling, but does not give an extreme selling case. The reason I'm labeling this as a setup simply means, let's assume you want to start trading. As time goes on, you understand what I'm saying. You might want to refer to this for later on sake. You might want to risk or place a trade or execute a trade, and then you feel like, okay, because I'm having an extreme engulfing candle case here, extreme bullish case, you can go A plus setup. A plus setup can be maybe 3% of your portfolio, 10% of your portfolio, depending on your risk appetite. So let's just assume, okay, our A plus setup is 3%. So you are expected to risk 3% on this A plus entry setup. On this A plus entry setup, you are expected to risk 3%. That's why in my signal group, I always write A setup, B setup, C setup. I've explained that to my previous students. They already know what to do when they see my signals. Most of the time, you see A plus setup, they know that, okay, this is the amounts they are meant to risk based on their capital. Then when they see B setup, they know, okay, this is the amount I'm meant to. When they see C setup, they know that, okay, this is the amount they are meant to risk. So when you have a B setup, it simply means, yes, this bias is actually very good, but it's not as strong as A setup. So your risk should be minimum. If our A setup is 3%, our B setup should be 2%. Our B setup should be what 2%, as simple as it is. Then C setup should be what 1%. So as that is it. I'll give room for questions. I'll give room for questions very soon. All right, so we can't. This is actually giving us a sell case. This candlestick is actually giving us a sell case here, giving us a sell case, but we can't. They are not the same thing. Our parameters of judgment say no, this one is more than this. Why? Yeah, this is where most beginners or newbies make mistakes. Because this is a red candle does not mean we are having a selling pressure here. Please pay attention. It is our parameter of judgment that will be able to that will give us discernment to say, okay, yes, this is although it's red candle, but it is not suggesting sell. So based on what you have been saying, it simply means this candlestick simply means that at the particular point in time, it's opened at the top here. The price here, or the market opened at this top. Then sellers came down to push the price to an extreme sell zone. And when the buyers saw that, okay, they are pleased with this current market price, they came immediately because they have sufficient time. Then they came to push the price all the way to this point before the time stops everybody out. So we have this kind of candlestick formation, which we popularly know as what our Amma candlestick or whatever you call it. So this is a type of candle that we call rejection candle. Do you understand? So the question is, for you to be able to decipher, it is a buy candle or a sell candle is not dependent on the color. It is dependent on our parameter of judgment. What is the parameter of judgment? 100%, 50%, 0%, buy zone, wait zone, or the sell zone, or indecision zone, or equilibrium zone. So the price closes above your weight, which simply means what? To buy. So when you see this kind of candle, it simply means buying pressure. We have is an indication that yes, it is time to start considering to buy. Maybe let me go to the chart to see if you have something like that, something like this Amma candle. When we start seeing rejection, it simply means the selling, what is it called? Pressure is already reducing. The selling pressure is already reducing. We have a few scenarios here. You have this one here. You can see the rejection. Then we start saying buy. Please, I'm not trading candlestick. I'm not trading candlestick. However, we will learn how to use it. There are some zones that you must see that this thing forms on. When you see that this thing forms on this zone, you know, okay. Like for instance, now let me pick my language. Let me just use pure support and resistance. This structure. We can see that the price here. This is a simple. Resistance became support zone here, and this candlestick actually formed on our support zone, or let me say before the price action, a resistance zone, a rejection candle. And what is this rejection candle? This rejection candle is a bullish scenario. What are you going to do? You wait for the candle to start printing bullish scenario, to actually you wait for buyers to actually come into the market. Then you strike. Once you see that, okay, all right, yeah. When you see that, okay, after this rejection, hope you can see this rejection candle, this candle here. When the candle has formed here, we see that, okay, this is the highest point here. Once price, I'm teaching you entry already, you don't need that. Price started rejecting to the upside, started going to the upside. You have another rejection candle. You have this rejection candle here. This rejection candle it's rejected away from the buy side and it closes down. That's why the source leads to selling scenario. This is our Morningstar candlestick formation. I'll explain that one in a jiffy. I hope there will be time for that. So let's just leave all this. Definitely learn them. This one's now. This is very, very simple. Please, that person should mute this on mic.
Hold on.
Who is that person? Please. The person should kindly mute a mic. Okay, I don't need to talk. All right, all right. Let me just do this. Um, it's very good. So, yeah, simply indicates buying scenario or buying opportunity or buying pressure because we have a rejection to the upside and then the price closed above this our weight. Anytime price mistakenly close above this weight of 50%, it simply means what buying pressure. It's time to it means buyers are actually dominating this market, not necessarily time to buy, but it simply means my buyers are what dominating the market. Now we have this green candle here. Can we say because it's a green candle, we start buying? No, you have to understand the anatomy first. Once we've gotten the anatomy, then we can now take decision based on the interpretation of what you are saying here. So I want to be very very fast. I think we have limited time here. The open of this candle, this green candle, is always where at the bottom. Don't forget. For something to be said to be at the top, simply means it was previously at the downside. So something miraculously skyrocketed, made the thing skyrocket or jump or fly to the upside. Then that means you always start from the down, which is here, not here, here, not here. So price opened here. The sellers came to push the price down to this side. Then buyers immediately push the price up, forming a rejection candle. Do you understand? Formed a rejection candle. Formed a rejection candle to this side, and the candle closed above our waiting zone. So it simply means what to buy, an indication of buying pressure. Anytime we notice that our candle closed above or closed above our waiting period or our equilibrium zone or 50%, it simply indicates what that buyers are coming into this market or dominating the current market. Now we have the same thing here. The sell always open at this place at the top. The sell will always open at the top and then close here. So in this scenario, when the price opened here, the buyers came to the market, they were interested, they pushed the price up to this side, and the sellers dominated by pushing the price extremely low to this side. Do you understand? So it simply means what? Selling pressure. Why? Because the candle closed below our 50%. It did what? It closed below our 50%. Now let's go to this other candle, this green candle. Just because this is green candle does not necessarily means we are buying. Do you understand? So the candle opened here, then pushed the price up to this zone. Immediately the sellers came to the market and pushed the price, then the time stopped everybody out here. So the time stopped everybody below our equilibrium or below our 50%. As simple as that is, it simply means what? Sell. That means sellers are currently dominating the market. So we have this other indecision candle. Indecision candle here. We have our indecision candle. This is our red candle. Anytime we see this type of candle, it simply means both buying pressure and selling pressure are very low. So none of these parties, either buyers or sellers, are currently interested in this market. That is just a simple analogy of having an indecision candle. It simply means they are currently not interested in this market. So the analogy simply means market opened here, buyers pushed the price up to this side, pushed it down, seller pushed it down to this side, then buyers came to push this side, then the time stopped everybody out here. So here is not an extreme case, it's just more like an indecision because we have more let me clean this thing today. We have more selling pressure here than this particular point here. Then we have more buying pressure here than this particular point. And we could also see that the sellers here, the volume or the amount of sell we have here is the same thing as the amount of buy activities we have here. So since we have equal buying and selling activity, it simply means nobody actually won. That is 50% scenario indecision. Do you understand? So the same thing here too. We have equal selling pressure. But this is this downside because buys actually push the price to this side. Is a buying pressure. Then price push price to this side down here is selling pressure here. So we have equal buying and selling pressure, which simply means indecision. We don't really know who is going to dominate this current market. Now, basically speaking, we are done with candlestick anatomy. But let me now go into what we called candlestick formation. So we have an idea, a graphical idea of what we're talking about. So we have something like this. This is what a bullish engulfing candle. Why? Because it is the bullish candle that engulfed the bearish candle. So you call it a bullish engulfing candle, which simply means what? Buyers are in this market. They are extremely interested in buying this particular pair, buying this particular assets because you might be trading crypto or whatsoever stock. So they are extremely bullish here. You have a bullish scenario which indicates buy. Now another candlestick scenario is when we have something like this. We have another one like this. We have another one like this. Hey. Please pardon my drawings. Something close to this. This is what we call. We have 10 minutes more. Something close to this is what we call the morning star. These are morning star candlestick. When we have an indecision candle here, we have this red candle. You have an indecision candle. Then we have a bullish candle that engulfs it. The whole idea is that we see a candle that engulfs the previous candle. So it means a buy sentiment. When we have the opposite, which is something like this, we have something like this, something like this. We have something like this. This is our red candle, and this is the green candle here. The whole idea is that what we have a candle that engulfs the previous candle. We have a candle that engulfs the previous candle. This is actually the red, and this is the green. All right, so this is what we call the evening star, whereby we see. Let me see. You can see that the candle, we have a green candle here, then an indecision candle, and immediately we have what is selling pressure that engulfs these two candles. So this is what we call the evening star. It simply suggests selling activity or selling pressure. Do you understand? So if you can understand engulfing candle, it simply means um, if you have a bullish engulfing candle, it simply means we have a bullish sentiment. If you have the bearish engulfing candle, it simply means what the bearish sentiment. Bearish means to come down, bullish means to what to go up. So let's quickly go into the chart. This here, this place here, you can see those three candles here. We have this one, we have this red candle, decision candle, then we have this uh, other candle here. The ideology simply is this blue candle engulfs this candle, this three candle formation. So it is called a morning star, or it gives a bullish sentiment. Do you understand? It gives a what? A bullish sentiment. Let's look for another one. Okay, I want to talk about this. This is a small advanced step. Okay, here you have another engulfing candle here. This is bullish engulfing candle. This is like our two candlestick formation here. This green, this red, and this blue candle. That is the bearish candle and the bullish candle. We have an engulfing here, so we are expecting higher price here. The same thing here also. We have an engulfing candle here too. This big long candle engulfed this smaller candle. Do you understand? So in a bullish scenario, you are always expecting an engulfing, a bullish engulfing candle. While in a bearish scenario, we'll be expecting what? A bearish engulfing candle. Do you understand? So here also we have a bearish engulfing candle here. If you can look at it very well, you'll see that in this scenario, the red candle engulfed the blue candle, or the bearish candle engulfed the bullish candle. So as simple as it is. So all these candlesticks are actually used to indicate a reversal pattern. We have another candle here, which is called the morning star. So they indicate, and the morning star and the evening star might not necessarily be red, blue, blue, or red, green, green, or red, black, red. It can be blue, indecision, blue, or whatever. As we advance, we understand them very, very easy. Then where we have an evening star here, you can see sell indecision, then sell immediately. Then the price dump down to the side here. So your ability to be able to interpret this chart will actually go a long way. It's actually a big deal in the market. Do you understand? So my time is up. Now we have just 5 minutes for question and answer. So if you have any question, kindly raise your hand or mute your mic, then ask your question.